Good afternoon, podcast listeners. This is your boy Marcus Norman from Gentleman Style Podcast, your host of the greatest podcast coming to you live in America. And today we have the amazing, the incredible, the stupendous Liora Israel coming
Leora.
to you. Leora. Oh my God, Leora
It's
coming
all
all
right.
the way to give back and to educate us and to help us in business.
Mhm.
Um, all these different things, all the things happening in this economic climate, all these things happening in the world right now, it's huge. Because with everything that's happening, we put our business on the back burner and we forget that we need to also prepare for next year. We still need to move forward in business and we still need to grow and we still need to keep an eye on our business and
Mhm.
mind our business because without that, as we all see right now, the economy doesn't survive without business, and she is here to help us. Some background about my special guest. She has a bachelor's of science in biology, and after serving in the healthcare industry for over 15 years, caring for others and sharing with others and helping others, she has always been her greatest and reward and a mission that she holds near and dear to her heart.
Mhm.
That same compassion and desire crosses over to the financial industry. And so she has also been able to impact and help and share and help the lives of so many other families with tax preparation. She's also a licensed realtor for you
Yes.
looking for a home and looking to grow your real estate portfolio if you're on the investment side of things, but also just shopping around for your first home. And so she is a plethora of knowledge, and we are going to deep dive today with her and ask her some questions so she can help us survive during these pandemic times. So I give you Miss Israel, and in all her glory.
Wow. All praises goes to the Father first and foremost. He's the one that opens up the avenues for me. He's the one that, helps me retain the knowledge and give me the will and the desire to give back to my own people when there's so many of us that don't. So all glory goes to the Father.
True.
Um,
Amen.
so I don't know. Where did you want to
Amen.
start?
I want to dive right in. And
Okay.
I did a pool of questions that I reached out to my audience beforehand. And those
Mhm.
questions I want to share with you today. And I want to
Okay.
ask you, I have a friend, he's an independent contractor. He takes
Gotcha.
$5,000 a month from his business bank account to cover his personal expenses. Is any of these, is any of things that he's doing deductible?
Absolutely. When you're in business for yourself, well, first, let's start here. The tax code is written in favor for the self employed, for the small businesses, and for the corporations. Now, I know that that sounds absolutely terrible. That, there will be certain people that our taxes are in favor towards, but think of America in itself. America is a business. Like, we're more than just a nation. We're a business. You know what I mean? So,
Mm,
um, of course,
true.
they do a lot of different things around how this country was built. You know what I mean? So, yes, a lot of things that you do with your income are tax deductible. One of the biggest things that I really try to reiterate to people and try to get people to understand is even if you are a working wage owner, earner, meaning you get a W-2 from your employer at the end of the year, you should have some kind of side hustle if you're looking to earn the taxes that you pay out back. Okay, so that's important. But to answer your friend's question directly, yes, he can deduct his expenses from on his taxes. So when you're an independent contractor, the money that you make, you want to always set aside a percentage of that for taxes. Okay, So the taxes that you're going to pay as an individual, independent contractor, as a sole proprietor, as an individual, because those are different tax entities in itself, people that are self-employed, you're going to have to pay your self-employment taxes, which are your FICA taxes that goes towards Social Security and Medicare. Those are required, okay? And you're going to
What?
also have to
What?
pay income taxes. Yes. So, yup. So when you're working at a job, your employer takes those taxes out for you. The total amount is like 15 point something percent, and you're responsible of paying like 7.3%, 35% of that. Or well, no, it's 7.65% of that comes out of your working wages, and then your employer pays the rest of it, right? When you're
Right.
self-employed, there's no employer paying that other percentage for you, so it all falls on you.
Mm.
Um, so one of the ways that you can kind of work around that is, number one, if you're going to pay the tax, make sure you put the money up, because let me tell you, you don't want any problems with the IRS, okay? You don't want with Uncle Sam. I'm trying to tell you. So listen to me and avoid those issues, because the worst thing that you can do is to get yourself caught up with them when they are so easy to work with. All you have to do is follow the rules. You know what I mean?
True.
Kind of like, us with our kids. We let them know all you got to do is follow the rules and you'll be okay. But so my independent contractors, here's what you want to do. 40% of what you make needs to be put into a separate account for your taxes. I don't care.
40%.
40%. 40% of everything you make needs to be put into a separate account for your taxes. This is to cover your behind, okay? That's not saying that you're going to use all of that for taxes, but to be on the safe
Okay.
side, that like the max tax you're going to have is, you know, if you are at an income of up to like 100,000, yes, it's going to be about 40% taxes that you're going to have to pay on that money. That doesn't include like expenses and things like that. So when you add in expenses, that number drops down because you're only taxed on what you profit. Does that make sense?
It does. It
Okay.
does.
So another thing is, a lot of people like to just write everything off. Yes, 40%. A lot of people just like to write everything off. That's
I
not
can.
always
I
to do. Yeah, you can. You can write everything off and potentially pay $0 in taxes. Amazon does it. They pay nothing in taxes pretty much.
our president does it.
Yeah, absolutely. So um you, as like starting off as a small business, you want to consider your future plans before you decide to do that, because your taxes affect that. For instance, if you're self-employed, you make $250,000 a year, or let's just do something simple. You make $100,000 a year as your income and your profit, but you write everything off so that it looks like you make negative, and you have a $0, tax balance that you have to pay. When you go apply for that mortgage, they're gonna look at you like you're crazy. They're gonna say, "Sir, your income is negative 41, whatever, whatever, whatever." Because you get approved based on the amount that you actually pay taxes on. Um, and so you want to consider what your future plans are, like personally, on a personal level, because my independent contractors and my sole proprietors and individuals, those are people that don't necessarily have the LLC set up. So it's not business. So this is like your business income is your personal income. Whereas when you have an LLC or any other kind of entity set up, you have business income and then you also have personal income. So you have the both of them.
So you want to separate the two. You want to keep the separate, and so that you can maximize the most write-offs.
Exactly. So how can I explain this? I'm trying to make everything as simple to understand as I can because I don't want to confuse anybody because I can just go off the rail.
I
um,
appreciate that. No, I
so
appreciate that.
you have different entities, like when you're doing some kind of work, self-employment. We've all heard the term LLC before. That's you setting up a business, so forth and so on. We heard of S corp, we heard of corporations, we heard of limited partnerships, so forth and so on. So then you have the
True.
minor of those few that are just individuals. Like, let's say I work for you. I'm not an employee because I bring my own skills and my own services to the table. So you would pay me a 1099 as an individual contractor, I'm saying it wrong, independent contractor.
Right.
Um,
We with you.
so
We with you.
I would, instead of giving you some kind of EIN number, what is like an employer identification number that's given to you from the IRS and the state, I would be giving you my social security number for your own tax records. So that makes me an individual or a sole proprietor. You're not necessarily you're not employed for anyone and you're not necessarily an LLC because nothing is getting paid in the LLC's name. It's getting paid directly to me. Okay. So I hope you guys
Yes,
all
ma'am.
understand that. When you have the LLC set up, everything gets paid to the LLC, but the same rules apply because on the LLC, you have to pay those self-employment taxes too, because you get taxed on the LLC's profit, and then you get taxed on the income that comes to you as the owner as the self-employment income.
So a double hit.
Yeah, it's a double hit period. They get you. But
Ouch.
as an LLC, you can be taxed as an S corporation, which is a little different. You're not set up as an S corp, but you can be taxed as one, which means you have to pay yourself a salary. And that pretty much helps alleviate the self-employment taxes. So you're only paying taxes on the income that you make as the owner of the company, and then you pay regular employment taxes like you would pay an employee. But it's a lot lower than it would actually be if you were not to be taxed as an S corp and you were just paying the regular self-employment taxes and income taxes like normal. It's a lot higher. But and being taxed as an S corp is not anything to take lightly at all. There's a lot of considerations you have to make for that, and I think we're going to get into that in a couple minutes. So, did I answer your friend's question on what they can deduct?
I feel you did. You definitely answered some questions of mine, and if they didn't get their
Mhm.
questions answered, they can definitely seek you out, right? And they can definitely find you and connect with you to fine tune this thing,
Mhm.
because the best practice that I've learned is, and that I've heard, is to always do it right. Right? You want, when you set up your business and when you start your business and whatever you decide, you want to start the right way. So whatever that path looks off, if it's going into S corp, if it's going the sole proprietor route, you want to do that in the front, because if you try and fix it on the back end, you
It's gonna
end
be a
up
lot of
losing
money.
more. It's a lot of money to have
A
to
lot of money.
redo everything.
Yes.
Yeah. So
So you're
so
absolutely correct, Marcus. And I try to tell people this all the time because a lot of people, it's so important to do your own research, but sometimes in doing your own research, you can get lost in all of the information. So I will always recommend seek out a professional that you can at least consult with, even if you don't have them do it with you, because I know everybody's just trying to get you your business and try to do everything for you and cost you more money. But at least pay for the consultation to get the information that you need, you know?
yes.
Um, when you are setting up a business, please, please, please do everything right because the last thing you want is state and local taxes coming for you, the
Mm.
IRS coming for you because they can literally take everything from you, like everything. You could get sued by the public. They can, like, limited liability company. Um, I know a lot of people says protect your personal assets, but
Yes.
there's a fine line between what it actually protects that's not often spoken about. Because if your business doesn't have enough capital or assets to cover your lawsuits, then the judge can order those things to be attached to whatever personal assets you have. Excuse me, you have. So definitely do everything right. A lot of people do not. You can go on the IRS website. You can get the EIN number. That's 100% free. You don't have to pay anybody to do it. It walks you through it. If you need to Google what the questions mean, Google what the questions mean. Okay, that's where you should always start. Get that EIN number. Then you find the state that you want your business set up in. Most of the times it has to be your home state, whatever state you live in, whatever state you're doing business out of. You go on that state website. Most of the states are electronic now. There's a couple that are getting there, not quite there. You got to mail things in like Alaska. Where else? No, Colorado's. Okay. I don't know them all off the top of my head. I have the
That's
whole
fine.
list. I have every state's rules, regulations, everything. But you want to make sure you do things properly because, like I said, it can come back and bite you in the behind later.
Yeah.
So you're going to set up your LLC with the state. After you set up your LLC with the state, you're going to take your articles of organization, corporation, whatever it is that you got from the state, based off of the type of business that you set up. You're going to go open your business bank account. You're going to start building your business credit. Okay. Um, you're going to get some trade lines with some vendors. That's how you start to build your business credit. You know what I mean? Do it correctly so you put yourself in a position to not make any mistakes, to grow, all of those, things like that. So
Right.
definitely.
Are y'all getting this? Are y'all getting this tea? Do y'all see the fire coming off when she gets excited, y'all?
I do, and I
She
have to just keep myself calm and remember not to just ram on. Because listen, I have so much to give. I definitely would urge you guys reach out to me if you need a one-on-one because not every situation is the same either. So I'm just kind of making sure that I stick to the basics and just the normal guidelines, but everybody's situation is different.
absolutely. Absolutely. So our next question is I'm doing a landscaping business
Mm-hmm.
and I need a new pickup truck for my business this year. Is
Mm.
it better to buy or lease the vehicle?
That is entirely up to you. I am no fan of leases whatsoever when it comes to vehicles, but some people are because they like to upgrade and they don't keep it to. If you're one of those people, you want to change it up every couple years, you're not going to put a lot of miles on it. You can play by the rules of the lease, then by all means, go on right ahead. That's tax deductible. Um, Financing, you're going to get more tax deductions because you get a tax deductions for not only the mileage that you put on there, because when you lease, you don't get any tax deductions for mileage. And if somebody is doing taxes and they're putting mileage on there, they can actually get in trouble for that because you don't own that
Yeah.
vehicle. You're not even close to owning the vehicle. Someone else does. But you can deduct your lease, the amount that you pay for your lease. But when you're financing, you can deduct the interest that you pay, your payment, your wear and tear, and your mileage. So that's the difference between purchasing a vehicle for your business or that you're going to use for business. And leasing them. So
I
yeah.
love that. I love that. And that's unique, right? And she said, make sure she's trying to keep us legal. Above
Yes,
all else, we want to
absolutely.
stay legal, y'all.
Absolutely. Absolutely.
Um,
Play
and
by the
she's not,
rules and you will still win.
yeah, she's not going to lead you astray. She wants to keep you in line with what the IRS and the tax law says for
Mm-hmm.
your business, so that they can't come back and seize those same business assets, seize that same truck that's not even yours, right?
Yeah,
so
yeah. Mm-hmm.
so
Yeah.
that's powerful. Here's a unique one. I work from home, no
Mm-hmm.
brick and mortar building. How
Mm-hmm.
does the home office deduction work? And
Mm,
is taking
love it.
a home office deduction an audit red flag?
Anything can be an audit red flag. It doesn't matter what you do. Everybody has their day with the IRS. So that's why it's important to do everything by the rules. Here's what I'll give you. I'm going to answer that question in just a second because it goes into it.
Absolutely.
Um, when you're dealing with the IRS, you're self-employed business, even if you not are not self-employed and you don't own a business, if you are a working wage earner, you need anything that you're using to get your job done that you're paying for out of pocket, your workspace from home. You need to keep every receipt, every invoice, everything. You need to have that stuff, and you have to keep it for at least 3 years, you guys, because everybody has their day with the IRS. You never know. It's like a lottery system with them. It doesn't matter who it is, whether you're a business, whether you work for someone else or what, you can have your day to be audited with the IRS.
Mm,
It's your name today and it's just your turn. You got to show them why you deserve all of those tax deductions and credits that you've gotten. And if you can't show that auditor that you deserve those tax credit and deductions, they can take them from you and then you will owe them all that money back. Okay. So
ouch.
make sure you're doing things by the book. A lot of our people are good for, claiming other people's kids and just all kind of things that they're doing on their taxes. We got to stop doing that because you never know when your luck is going to be up with that. You know what I mean? So
True.
with the home office deduction, it's absolutely worth it. It's not a red flag with the IRS. But you want to make sure that you know the square footage of your property. Out of that square footage, you have to know how much of that you're using as an office. When you know how much of that you're using as an office, that is the amount that's going to be deductible for you. So you can take that amount out of the amount that you pay for your rent or your mortgage, okay?
Okay.
And then you're going to any like renovations that you had to make to be able to work from home. You're going to claim that as well. That's like all in the same section when you're doing those deductions. Um, so what else was there?
So the renovations and then that home office deduction, and knowing the square footage in the home that I actually use for personal,
Exactly,
and then what I use for work related
exactly.
business.
But
And
here's the
so,
thing: when you at work, you go to the break room. You go to the break room, right?
true,
Every job
true.
almost every employer has a break room that you can go to and just relax and take your break. You can deduct that. Where's your break room at?
The kitchen, the
The
refrigerator.
bathroom. Where's your bathroom at? You know what I mean? Exactly.
It's
So
true.
all of those things can go into working from home as well, not just your little corner that you have set up at the house. So they're a little more lenient with that, especially now with the pandemic and almost everyone was forced to work from home. Listen, everybody, tell everybody that you know they better be claiming that on their taxes this year. Get them little couple extra dollars back, okay?
It's true. It's
So
true.
yes, you can deduct that every year. There's no, as long as you're working from home and you can prove that you were working from home, you're keeping records. When you're working from home, you want to keep a record of your hours too, because that's something that they ask for sometimes if you come up in audit. And like I said, these are the type of things that you're going to keep on records, keep somewhere very safe for 3 years. I always recommend when it comes to anything business, go out to Walmart or one of them stores like that and get you a fireproof safe and keep your documents in there that you want to write out on paper, unless you have some kind of cloud system or something like that to store everything. You want to snap a picture of every receipt because we know receipts, you put them in your pocket, they fade, you don't know what's on them, you'll get in trouble for that. You know what I mean?
It's
So
true.
you want to make sure that you have them, that you can show them that they have all the information on there that is needed.
That's true. It's so incredible and it's so impactful because you touched on something that even the big time business owners mess up, and that's keeping
Mhm.
proper documentation, keeping those receipts. And it sounds like I even need to invest in a punch clock, right? I need to clock in and clock out.
You don't
Um,
you could do like a timesheet for yourself. You know what I
okay,
mean? Or you can just, if you have a calendar that you use on your phone, you can just put the hours in there that you worked that day. That's something that's very easy. Like if you have an Android, it goes over. Like no matter what new phone you get, as long as you log into your Gmail, the record will always be there. So you can do that. But I'm more of the type of person where, I gotta write it down and put it somewhere, and or put it in the cloud system where I know it's gonna be at for sure. You know what I mean? So
true.
yeah, you don't need a punch clock, but definitely take some kind of method of recording.
Absolutely. I like those. I like those. So y'all, she is spilling all the tea right now. So you cannot get this anywhere else unless you book a consultation with her. Um,
Absolutely.
and, and she's helping us, right? She's preparing us and saving us for next year and
Hmm.
keeping some of that money back in our pocket. COVID-19 was unexpected. It was
Yes.
unplanned. And now we have an opportunity, a unique opportunity to put these funds back in our pocket by default, right?
Yes.
So, it wasn't something we planned for, but now we might as well take advantage of that home office that we
Hmm.
undoubtedly probably created without even realizing it.
Yeah.
So that home
Oh,
office
don't forget
deduction is
your lunches
powerful.
too, especially if you worked for an employer that, would normally provide lunch to you or buy lunch for you or something like that. Those can definitely be something that you can tag onto your taxes as well. Any traveling that listen, there's so much because the tax code is like 20 something thousand or more pages. I haven't even gotten through the whole thing yet. Like, you can be the
Wow.
best of the best. It's just, and it's always changing. There's always temporary things. Some stuff go away. Like there's so much to it, and it's really interesting actually to like, when you start reading through it and everything. It's available to the public. You can look up the rules. You can search certain things by keyword terms, all of that. So I definitely encourage everybody to do that too, because sometimes, so let's say you do get audited by the IRS, you can represent yourself, you can hire an attorney to represent you, or you can hire an enrolled agent to represent you. I'm actually working on becoming an enrolled agent right now, which means I can represent people before the IRS just as an attorney would. So I'm not currently an enrolled agent yet, but I do have a client that was audited for 2018 tax return, and I was able to walk her all the way through the process of defending her credits and her deductions. And she had already been through like three people, which they were accountants, that weren't able to do it for her, and the IRS just kept on telling her no. So when she came back, they said, okay, now you're representing yourself, like that's going to really do you a lot more good. But she came armed this time, because with them you have to prove, like, why did you have to buy a new car for your business? Your old car was just fine.
Mm.
Well, she has to appeal to a certain type of clientele for her business. Oh, why did you have to buy mannequins? You could have just laid the wigs down on the counter. No, 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 no.
What?
She needed these mannequins so she could take professional pictures to appeal to her clientele. Like, so with certain things like that they could easily say, no, you didn't need to do that, you didn't need to buy that, or you didn't need to use this service, or whatever the case may be, you could have did this instead. So basically they try to tell you how you could have ran your business, and if you're not armed and you don't know how to deal with them, they can do that. And then you will be left salty, not knowing what to do and owing them all this money back. So you really have to know how to defend yourself against, saying, no, this is what I need to do to run my business. Okay. These are the people that I work with. This is what I do. This is how it should be done. So it's like a head, going head to head type of thing. And that's not easy for a lot of people to stand up and be able to do that for themselves. But even though I'm not an enrolled agent, I couldn't do it for her. I was able to still support her, like I was in her ear type of thing. And she got to keep all her deductions and credits. So yeah, I'm happy about
Amen.
that. We just got the final decision like 2 months ago. So, and that was my first time actually doing that with the client. I never had a client get audited before, but she came to me. I'm like, this is everything. I made sure she had records of everything. We did everything right to the T. Okay, but it was her day. It was just her turn. That lottery, that
Wow.
Powerball just got picked.
And it fell on her.
It fell on her.
Wow.
I did see someone ask
Wow.
a question about business and taxes that I think I missed.
Yes, it looks like I am trying to get it for you.
Okay.
One of so here it is. Here's the question. So if I remodel my basement as a home office, I can
Mm-hmm.
use that as a tax deduction.
Yes.
Is the question.
Yes. You
Yes.
can. Yes. And I encourage you to do it because who doesn't want a slamming basement? Absolutely.
And
So you can. Um, the total cost of the renovation, they give you a percentage of it that you can use based on how much of that space, again, you use towards your home office, which is all of it.
wow. So remember that what she said earlier, she said keep those numbers, keep how much you spent in remodel, but also the square footage of what
Yeah,
you remodel. So if your house that almost the same square foot, well, probably not. Remember the square footage of your basement. You need to know the square footage of your basement. So if that
yeah,
remodel isn't finished, get those numbers real quick so you can get inch to inch and get every write-off that you can.
exactly. So here's how that works. I'm gonna explain it again. So you pay rent or mortgage. You're gonna take the total amount of that rent or mortgage that you pay. You're gonna keep that number up at the top. The amount of square footage that you use for the property, you deduct that percentage, you deduct that number from your total square foot. You're going to figure out what the percentage is, right? And then
Right.
that's the same percentage you're going to deduct from your rent or your mortgage. So that's one separate deduction in itself, how much you pay for your rent or your mortgage based off of the square footage. And then the same thing for the renovation. How much of that area you actually renovated to work in, all of it. And then
Every inch.
every inch, because if you was walking into a regular office, listen, Mr. Taxman, I had to do the whole basement from my office because I'm used to going into a building that has about this much space or more. And I had to have that same ambiance and that same type of environment in order to be productive to do my job. See,
Mm.
I just did something there. Did you catch it?
That's a nugget. That's a golden nugget. So here's her follow-up. Here's her follow-up question. Will it have to be approved by township or anything for running a business in a home?
Depends on what township you're in. It depends on what kind of business you're doing as well. Any kind of business that you would have outside the home that would normally cause you to have some kind of commercial activity license, or if you have to get something like, let's say you do food, you cook platters or whatever. Yeah, and you're doing it from your home. Yes, you have to be certified by the health departments with that. That's how people are able to call on you and report that you're selling food out of your house and you get fined and all of that good stuff because you don't have a food certification from the health department. So it just depends on what kind of business you have and what township you're in. If you would like, you could definitely reach out to me. I can help you figure that out. No cost at all. I charge for consultations, but simple information I don't charge for. I My business and my tax consultations I do charge for, but because I'm consulting you on what exactly to do for your business. But for simple information, no, I don't charge for that. And then pretty much all townships and cities require you to have some kind of like commercial license if you have a business. So keep that in mind as well. Not all of them do, but a majority of them do. Like if you're in the city of Philadelphia, you've got to have something with the IRS, the state, and the city. If you're outside of Philadelphia in one of the counties, some of the townships require that you have a business license with them. Some of them don't. So it just depends where you are. Ooh. Preparing your business for the upcoming tax season. Everything that I just said, you want to have a record of all your expenses that you paid for your business for the whole year. That's going to be the biggest key right there, is knowing what you put out there and having proof of it. Okay, you can't just say, oh, I brought this and I paid that, let me just put that on there. No, if you don't have a record of it, you can't put it on there. Like some things you can get away with doing and others you cannot. Like if you brought like electronics and stuff like that, and you don't have the receipt anymore, sometimes they'll let you get away with that. But for the most part, you want to make sure you have a record of everything. So get all your receipts together, get all your financial records together, get your bank account records together, everything that you've done with your bank account for the year. You want to staple all that together or upload all of that together and keep it in a little file marked 2020 taxes. And when you go to do your taxes or your tax professional does your taxes, you're going to make sure you have that. Because a lot of times if your records ain't right and you're telling us you did this and you did that, we're going to charge you more because we got to figure some things out. So, and then you want to make sure that you have everything organized too. Save yourself some tax preparation fees and have everything organized that you paid for, based off of building expenses and everything that goes into that, like utilities and stuff like that. Utilities is another thing that you can claim. And then things for inventory, things for subscriptions and stuff like that that you have all of those things in order so that it makes it easy for your tax professional. They don't have to keep going searching through things. They can just go from page to page and just insert it. That'll save you a lot of money.
Absolutely. Yeah. Absolutely. So for all of you tuning in and subscribing to the show, please like, share, and subscribe and share this, because this information, again, you can't get this anywhere else. My goal is to bring you impactful people in the community like Miss Israel to the community to serve and to help us get to a better state of mind and to get to a better place business-wise for our companies and personally, right? These are personal things. A house, she mentioned real estate, she mentioned taxes, she mentioned cars, she mentioned family, and all these things are personal as well as business related. And so please share this out. Please.
Daycare clothes, all of that. Yes, I had to buy them new clothes so they could go to daycare, so I could go to work. I just did something there.
Uniform, right? That's considered a uniform, right?
Yeah,
the clothes that I wear to work.
Whatever you got it. Yes, yep. The clothes that you wear to work. If you have to wear a uniform, absolutely. Yep. Any kind of tools that you have to buy to do your job, yeah. So when you're a wage owner, though, they changed this. Trump changed this with the tax laws. When you're a wage owner, you no longer get to write off expenses for work. Like if you're a nurse and you have to buy a stethoscope, you can't write that off anymore. Only military professionals get to write those kinds of things off. But when you're self-employed or independent contractor or any of those things, you can write that stuff off. So my wage owners, that's why earners, sorry guys, tongue tying. My wage earners, that's why you need to have a side hustle, okay? Having a side hustle, especially if you're single, you don't normally get a lot back when you file your taxes or you owe. By having a side hustle and being a individual or sole proprietor, or even having a little LLC on the side, that can actually help you get more back on your taxes as well. The expenses that you paid out to do that side hustle or to have that business can help you get more back on your tax return for your wages. So keep that in mind as well. Like where you can't claim those things, like in general, as far as like writing them off. If you were to only put your W-2s on there, if you put a Schedule C on your taxes, then you can. Does that make sense?
Makes perfect sense.
Like, let's say
Makes
you're a
perfect sense.
CNA and you work in a nursing home or hospital, but you take care of somebody else on the side that may be like considered under the table or whatever, then that's your little side hustle. You don't have to have an EIN or anything like that to do it. You can still claim that on your taxes, and that's actually helpful. See, our people have it messed up thinking that when you paid under the table, it doesn't benefit you. No, 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 it does if you do it correctly. It does if you are earning wages somewhere else. So share, share, share. Tell everybody you know.
And so, that same example, take that stethoscope that, when the IRS, if they come for you, when they come for you, take that
Mhm.
stethoscope and say, why did you buy that stethoscope? Oh, no, I didn't buy it for my job. I use it for my personal, for these customers, my clients that I
Mhm.
treat at this daycare, or the clients that I treat at this gymnasium for physical
Yeah.
therapy, or my customers that I give massages to. I use that stethoscope more than just the five. And I bought it not
Mhm.
just for my job. I bought it for my business. And
There
so
you go.
that's what
Yep.
she's saying. That's what she's
Yeah.
saying. Get what you have on a personal side and get it on the business side, because that's the
Exactly.
best side. That's where
Ding,
it
ding,
needs
ding,
to be.
ding. The other people been doing it forever.
Woo!
Beginning of time, okay? They wrote the rules, and as a good I would like to think that I was good, tax professional. You gotta chew in the chicken and spit out the bones with like everything that they teach you. Like, who better to teach you how to operate and navigate through the system than the ones that created it, right?
It's
So
true.
there's just like, when it comes to taxes, that's like actually, besides real estate, that's one of my favorite things now, because the more that I continue to learn, because I'm always learning, I don't claim to know everything, the more I'm just like, wow, oh, what? This is how you do that? What? So it's really amazing the things that you can do. And like I said, the more that I continue to learn, the more that I continue to grow, I give that same knowledge back to the people. And I'm not gonna sit up here and charge you an arm and a leg for it, because I feel like we are already behind 400 years. I can sit up here and try to make a profit off of my people, but what do I really gain by being at the top by myself? You know what I mean? So
That's true. That's
yeah.
so true. We had a great question. I want to bring it up to the screen.
Mhm.
The question was, what expenses can I deduct as a real estate agent?
Everything. What? Everything. I think that was one of my sisters. Shalom, sis. um, everything. But again, when you're deducting things, you want to ask yourself, what are your future plans on a personal side? Is it going to benefit you, like not paying anything in taxes or paying very little in taxes? How is it going to hinder you? Because it can. You know what I mean? And some things, like I had mentioned earlier with the whole mortgage, if you're not paying anything in taxes, your income is considered either negative or zero, or it might be something really low, and you don't end up getting the house that you want. Now, there are some other fancy sorts of financing out there, like bank statement loans and no doc loans and things like that, but you got to put like 20, 30% down, which is okay for some people. You know what I mean? You gotta have excellent credit. You gotta show like 12 months of bank statements that money is coming in your account. You have to show reserves that you have money saved aside from what you spend and all of those things like that. So I'm not saying that you can't do it. I'm just saying you ask yourself those questions on, is it worth it to you in your situation? So if you want to talk more about what you can deduct for your business and things like that, you can reach out to me and we can talk about your specific situation. But you always want to ask yourself those questions. What is it that I want to do in the future, and how would this decision affect me? You weigh all your options. Like, you don't start to build and not count the cost. That's in the book of Luke. So just keep that in mind.
Preach. So I hope that serves you. I hope that answers your question. If not, please connect with me and I'll connect you to her, or connect with her directly, because she's gonna share the best ways to contact her through her business so she can write it off. So the next question we have is, what's the best number of claims? I think we're talking about tax exemptions.
Okay.
To have on my W-2 for both federal and state. I live and work in Brooklyn, New York.
Ooh.
No dependents.
No dependents. You definitely need a side hustle, baby. No dependents. Your business got to be your baby, okay? So
Yes.
It just depends. It depends on how much income you actually make from your job, I would say, and then it's going to depend on other things that you do. So that's really kind of a hard question to answer until we have all the facts and know all the numbers. But so when you fill out your W-4, there's a certain amount of exemptions that you can claim off of the questions right off of that. Like if you have 2 or more jobs, if your spouse has a job, you put the different numbers in. If you have children, you pay childcare, all of those different type of things. So my kids is here back, and I'm so sorry.
We're good. No, we talk. This is right in line. This is in line. We're talking about dependents and claiming them. So this works. Your kids are on cue. That is on cue. And so I hope I don't mispronounce Miss Sanaya. I hope that answers your question, and I hope that helps. I know for me, I claim and help us, Miss Israel. I don't need to necessarily have kids in order to write off tax exemptions for my job, right?
No, you don't. But I mean, depending on what you do and your lifestyle, and your whole tax situation, you're going to want to really weigh out your whole situation. You don't have to have dependents. People with dependents can get the child tax credit, the additional child tax credit, the child care tax credits. If you're low income, you could get the EIC. Every state has a different definition of what low income is, because we know that people that live in California and New York, Washington are not low income. New Jersey, Delaware, Maryland. So that means something different for each state, what low income is. And based off of your state, you may or may not qualify for the EIC when you have dependents. And even if you don't have dependents, you can get an EIC if you're low income and you're head of household and things like that. So even if you're taking care of relatives, yes, you can. If you're taking care of relatives, you can absolutely claim them on your credit, claim your parents on your credit. I have clients who take care of elderly aunts and uncles, and they have them on there, and they have their own little income coming in too. So that doesn't affect anything. If their income is less than what it costs you to take care of them, like when you add that rent up, the utilities, clothing, all of those kind of things, if it's still less, then yeah, you can still get that percentage in that credit for them, a percentage of that credit for taking care of the dependent that's not. I have a client who has a girlfriend and he claims her on his taxes every year. So if you have a spouse, that's not working or making their own income, and you take care of them, then they're your dependent and you can claim them on your taxes. It doesn't matter how old.
Powerful.
Yeah.
Powerful, powerful, powerful. I'm we're talking about um tax benefits.
Mm-hmm.
What things should I consider if first off, I know a lot of people that are taking care of their parents. And so I think that's powerful. I think that's unique because they don't even realize that they can claim those elderly parents that you're taking care of, and get some money back and get that money back that you're spending. You're feeding them. You may be clothing them. You may be
Yeah.
buying diapers for them. You may be
Mm-hmm.
paying for medical treatments or dropping them off to a doctor's appointment or picking them up from a medical appointment, right? All those things, again, get those written off on your taxes, get those things claimed so that you can get compensated for your worth and your value.
Mm-hmm. You get,
So
yeah. So you're definitely getting your money back that you're putting out. Like some people are incentivized by getting back the total amount that they loan the government, and others don't. They owe those taxes, and that's that. But definitely, like if you're taking care of anyone else besides yourself, I do have like some clients that file a separate tax return from their parents. But you don't have to do that. Like it depends on their financial situation as well. So yeah. And if they're making a lot of money, like if they have a pension coming in and it's more than enough to take care of themselves, they may be like, all right, you don't really qualify for that credit because you do have to put in how much money they get from Social Security or from their pension and things like that as well. So yeah.
I'm sorry, y'all. When I'm looking down, I'm taking notes. So if y'all see me
And
look down, I'm actually writing. I am taking a whole bunch of notes. One of the last questions I want to ask, I want to touch on this. I'm considering hiring
mhm.
my first employee, but I'm
Okay.
scared. I'm terrified.
Oh,
What are
I just
things to Ooh, see?
sympathize with you because I just did it and I'm still scared. that does not go, that fear does not go away because it's just like now you're responsible for a whole nother person and their family, and you want to do right by them. So I sympathize with that fear 100%. I just hired two people, and it's one of the scariest things I have ever did in my life because I'm normally the one that's wearing many hats. I do a lot of things. I have like four different aspects of my business, with the real estate, credit, taxes, business solutions. I do a lot of things and I work a lot. um, so I would say to prepare for something like this, because we all know if we're doing everything, we can't really grow, right? Um,
How do
if
I
we're,
prepare for hiring someone? How do I
I'm,
prepare for that?
I'm about to give you the scoop.
Oh, okay.
So one of the things that you can do is get your business loan, save a portion of your profits, um, get some business lines of credit going to build up your capital for payroll. Okay.
Wow.
Um, and that's a whole nother conversation on even how to do that. So you have to have at least some sort of capital to cover at least, I would say 6 months, 3 to 6 months of that person's salary. Okay. Whatever you're going to pay them. Have that in an account that you're not touching. That's payroll money and that's it.
Don't
You
touch
don't
it at all.
touch it. Don't. That's somebody else's income that they're doing this work for you and you got to pay them. So don't touch it. I don't care how broke you are or whatever. Like, it doesn't belong to you.
That's true.
Um, and
That's
then
true.
you have to just let go. And this is something, as I'm telling you, I'm telling myself because I have to remind myself of this every day. Excuse me. Hold on. I'm so sorry. Go
You
upstairs.
good?
Go upstairs and don't come back in here. Go upstairs and don't come back in here. Go. Your dad is upstairs. Your dad is upstairs.
This is a family show, y'all. This is
I'm
still a
so
family
sorry,
show.
guys.
You're
I got
good. You're
kids,
good.
okay? I have 8 kids, and mom is just the one that has to do it all. So,
This is
um,
still a family show. You're perfect.
dad is right upstairs, and the kids are coming and bothering mom. So, what was I saying? I'm so sorry.
You were
Yes. So,
saying,
make sure that you have your payroll capital. Okay. Whatever it is, 3 to 6 months of that person's salary stays into a payroll account, and that's it. Like, don't touch it, whatever. You have to just allow yourself to let go. You know what I mean? You have to allow yourself to let go because we're used to being in control. And it's like, if you don't do it, it's not going to be done right. No, that's not true. That's why you hired someone, right? And you hired that particular person because there was something about them that you trusted. There was something about them
it's
that
true.
was particular and it made you feel like, okay, they would be a good fit for this job. So
It's
you
true.
have to let go of that control. You have to make sure that the person that you hire is well trained. You have to make sure that they can take over for themselves. Like, no one likes to be micromanaged, and controlling people like myself, we might like to micromanage, but you have to trust that that person is going to do what they said they're going to do. And if they don't, you keep a record of that and you have a conversation with them. You know what I mean? But definitely, make sure that it's someone that is to be trusted, that you do your due diligence, with the whole interview process and screening and so forth. Um,
That's big.
and make sure that they're really a good fit for the job. It may be somebody that doesn't really have any experience, but if they have that teachable spirit about them and they're eager and willing to learn and they want to help you, then give them the training that they need. You know what I mean? So
Yes, ma'am.
I'm talking to myself too. Leora, make time for the training.
Make them for
But
them.
you need, like, as a business owner, in order to grow, there's some people who can start a business and they don't want to work at all. They just want to hire a bunch of other people to do that. But if you're not in that situation and you got to work, like in the businesses that I do, I got to work. You know what I mean? Then you need to be working in your business and not on your business. Your staff needs to be working on your business. So they need to be the ones, initiating I'll give you an example with me on my real estate side. If I'm out showing properties all day, how it's not easy for me to get back to people by email. It's not easy to respond to every text. You know what I mean? When I'm with a client, I typically like to give them my full undivided attention, and my phone may be going off. I need somebody to return calls or send emails or send contracts or, work on my systems that I have, making sure people get onboarded, so forth and so on. So if I'm doing all that and this, you're going to be burnt out. You know what I mean? You're going to be burnt out. Initially, you have to do everything. But when you get to a certain point, you're making a pretty okay amount of money. You need to go ahead and let somebody do all the administrative or technical things while you work more so in your business. You know what I mean? So, if
Absolutely.
that makes sense.
Absolutely. And that's powerful because I've seen people I know business owners know business owners. So I know business owners who have actually staggered their business growth because they refuse to hire.
That
They
was me.
refuse to bring people on board. They don't want to hire. They just want to do it all themselves. And they think the only way that it's going to get done is if they
Mhm.
do it themselves. And so I've met numerous people who have stunted the business development because they don't want to let go. So what
Yeah.
you said is so powerful.
And guess
So
what? That money that you pay out for that staff member, tax deductible.
ding, ding, ding.
Absolutely. It's more tax deductible when you're giving them a wage, meaning a W-2 at the end of the year. So you're taking their taxes out of their check, making sure it gets paid to the government and so forth. You get more deductions for doing that, but you can hire people to come onto your team as a 1099 as well, and you can still get a tax deduction for that. It's not as big as the W-2 one, but still helps you. You know what I mean? So
That's true.
don't forget that.
That's true. Here's a unique one, and I've never experienced this. And I think you answered this earlier, and I think Mr. Daniel missed it, but for his sake, can you please give the example of how you help someone walk someone through the process of saving them from being audited, and does your company help people who owe taxes?
Yes, we absolutely do help people who owe taxes because up to 3 years. So anything past 3 years, we can't help you. We can help you arrange payment plans and things like that for the IRS, but we can't necessarily save you from having to pay those taxes. And there's a difference between the two. So if you owe taxes to the IRS, and you can't afford to pay them, but it was within the last 3 years, we can go back through all of your documents and your information and redo your taxes to change what you owe. If you're in a situation where it was longer, it was 5 years ago, and you owe them and you've been avoiding them, don't do that. Just call them, get things right with them. But what we do in that instance is we just are a mediator between you and the IRS, and we help you to work out a payment plan to reduce the tax debt and to just get back on good terms with them so that they're not, levying your bank account and everything that you own in your name, including your cell phone. They okay? They're coming for everything. Your great grandma passed the ring down to you. Oh, it's ours now. I have seen it. So it's nothing to play with. We've seen people in the media like that, So yeah, we do help people who owe taxes, but it just depends on your situation. If it's within 3 years, we may be able to get you out of it, because I'm not going to say we definitely can, because each situation is different. But if it was beyond 3 years, there's no way to amend your taxes at that point, at least that I know of, or that I was ever taught. So
powerful. As we wrap things up, what books would you recommend that every man or woman should read?
The Bible.
Yes, the ultimate book.
Listen, the Holy Bible is the reason that I'm in business, because I had a great opportunity that was handed to me to be in business for myself, doing real estate, 8 years ago. And I messed it up because I was too scared. I'm like, I don't like sales and this, that, and the third. And I already had another business, which was the taxes and the credit repair. So I was like, I'll just stick with that while I'm trying to go through medical school. But I wish I had done it sooner. Okay. Yes, but the Bible gives you all the keys to operating in business. Being an honest person with integrity, making sure you treat everyone with respect and, love, be at peace with everybody, help your own people. It's a plethora of information just in the scriptures alone. I do also realize that everyone is not religious or doesn't believe in the Bible, and that's fine. I just feel like just still operate in some kind of restraining moral, have some kind of moral restraint when it comes to business. Don't be slimy, don't do bad business, apologize when you need to, do what you say you're going to do, admit when you're just a little overwhelmed, and things like that, and just do things right and try to get information to make sure that you're operating the best that you can within your business. But as far as books, definitely the Bible is my number one. My number two is going to be Rich Dad, Poor Dad. And I know a lot of people say this, But that book, I have heard so many people say, read Rich Dad Poor Dad, read Rich Dad Poor Dad, read. And I'm like, what the hell? I don't want to read that book. But let me tell you, when I did, I was amazed. I'm just sitting here like, and it's already things that we know, you know what I mean? It's already things that we know, like, yeah, other people have a leg up. And the reason why other people have a leg up is because of ignorance. And nowadays, ignorance is blatant because information is at your fingertips now. Like, God gave it all to us so easy, but we don't really look into it. You know what I mean? A couple other books that I'm reading are the Tax and Legal Playbook. I think everybody should get that. It's by Mark Kohler. It was recommended to me from someone else, and that has changed my tax business for the better, in addition to training and things like that as well. Um, I typically tend to read books that are mostly in my industry. So like things like The One Thing and The Millionaire Real Estate Agent and Investor by Gary Keller and different things like that. I try to read things that are more so pertaining to me. And then I go back to the Bible for everything else on a more personal level. Does that make sense?
Makes perfect sense. Makes perfect sense to solidify what you just read, to make sure that you come back to scripture, to make sure
Every
it's
time.
in alignment.
Every time. Yep.
Absolutely. Absolutely. Who are your heroes and why?
Oh my gosh. This is a question that I had to think long and hard about. So I'm bringing it back to the scriptures again. They are my heroes. All of my forefathers and foremothers, they are my heroes. Just the way that they conducted themselves, the way that they took care of their own people, that they, helped each other, they educated each other, they fought for each other, so forth and so more, so forth and so on. I think that's important in business because here's why. As I'm a so-called African American, our people don't operate the same way that other nations do. Like other nations, they could, be in 30,000 different businesses or things or whatever, but they all help each other get there. You know what I mean?
Absolutely.
And the people who you read about in the Bible, they're real people. They are my foreparents. Um, they really set an example on how to be and how to conduct ourselves in every single last area of our lives. And for that, I'm thankful and I'm grateful, and I can't give God enough praises for that because that really helps to shape the person that I am today. So I'm going to say that the people of the book that are in the book are my heroes.
Amen. Amen. Love that. How do you give back to the community?
By doing things like this, by keeping my fees low cost and affordable, you know what I mean? By coming on different platforms and just teaching and educating people, giving as much knowledge as I can. Physically, I work with my organization that I'm a part of, and we clean up the streets, we do fundraisers, all kind of different things to really help our people and teach our people and give them tools for life and pretty much like everything that they need to survive and get out of their circumstances.
Absolutely. Absolutely. I love that. I love that. So you see, she's truly a well-rounded servant, y'all. And those are the people we need. We need more leaders
Mhm.
like her in our communities, making an impact and making a difference and literally saving the world. Because without them, we won't make it. right? We won't get through this pandemic. We won't make it to 2021. We won't make it for the next foreseeable future in a system, in a community of systematic racism and violence, and the destruction of our race. We have to stick together and come together. How can my listening audience reach you? What is the best way that they can connect with you and learn from you and work towards that business consultation?
Gotcha. So my business website, which is benjaminwolfgroup.com, is actually under construction, unfortunately. That's under construction, but we've added more services and things like that are coming really soon. I'm really excited to be able to help even more people. So that's why that's under construction. But for now, you can reach us on Instagram. My personal Instagram is Liora Israel CEO. My business Instagram is the Benjamin Wolf Group. You can find us on Facebook at the Benjamin Wolf Group, and Liora Israel Realtor on Facebook as well. And I'm trying to get into like the other social medias like Twitter and stuff like that. I know I'm so late, but I'm working on it. You can reach me by email at business@benjaminwolfgroup.com. You can reach me by phone at 717-546-7216. That's my telephone number.
One more time with the phone number.
717-546-7216.
Perfect. Thank you.
And you can also find me on leoraisrael.com.
Perfect. You guys, I hope that this has been impactful for you all, not just you all, but this has been impactful for me coming on this show and just learning and absorbing and educating myself and taking the time. I want to thank you for taking the time to spend with us, to educate us, to share, right? She I didn't pay for this. She's doing this out of kindness of her heart. So again, this has been tremendous and powerful.
Can I just ask some more questions?
You sure can.
Okay, I'm sorry. I saw someone ask the question about the $10,000 government grant.
Absolutely. They asked. They asked. I took at the government. There they are. I took the $10,000 small business loan. Can I write off anything from that?
Yes.
Interest, assets, any of that?
I believe the interest rate on that loan is really, really low. But yes, you can you can write off the things that you used the loan for because you're paying the loan back, right? But you're still going to own those things. So yes, you can write them off. You want to make sure that you purchase those things in your business's name, not in your personal name, right? Because it's supposed to be a business loan. Yeah, unless you're like a sole proprietor or just an individual and you normally just, file with your personal taxes. That's a little different. Exactly. Documentation is everything because they are going to ask you, what you spent that money on, so forth and so on. If it's the paycheck protection, a lot of people are going to get caught up with that one. So I hope if you really had employees that you had to pay, that you can show that so that there's no issue when they come around and ask for documentation, because you will be asked for it, even though on the application it wasn't there because they were just trying to get everybody processed and out the way. But they are going to be coming back later. I already know many people who got caught up with that, and actually it was like fraud all around and they actually got locked up. So please, you got to be careful with dealing with the government. Anything government is a no-no. So yes, you can deduct all of those assets on your taxes because the loan has to be paid back. If you got the paycheck protection, A portion of that may or may not have to be paid back. It just all depends on, how many employees you actually have, and you can show that you spend it on payroll. Um,
Okay.
the other one was depreciation for a real estate investor.
Absolutely.
So, yeah, your assets depreciate. So you can definitely write off depreciation on your tax returns. Um, Now, real estate is an asset that normally appreciates, but for tax purposes,
Yes.
you can write off depreciations. So that's the nice thing about real estate, and that's why it's one of the most favorited wealth gaining tools in America today. So, yeah.
So what things specifically can I write off in my house? Can I write off or depreciate the washer and dryer, the stove, the thing that I bought for my food, my refrigerator. I was drawing a blank. I couldn't remember my refrigerator's name.
Do you own your, if you
Yes.
own your house and you brought energy efficient appliances, yes, you can. But
Ah.
if you didn't buy energy efficient appliances, and you'll know if they are by the Energy Star that's on them. If you didn't, then no. Um, you can write off like any kind of heating systems that you install, HVAC systems. Of course, your mortgage payment, your mortgage interest, your real estate taxes. You even get a credit for that. Um, so yeah, there are several things within a household of while you're owning the house that you can write off as well.
That's powerful.
Yeah.
That's That's powerful. And so that's the new thing on the block. Now, just like you said, people think, well, my house is appreciating in value, so it's going up in value, and I'm making money on that end. And yes, you are, right?
Mm-hmm,
Your house is going up in value. So if you bought your house for $150,000 and your
mm-hmm,
house is worth $200,000,
mm-hmm,
there's value there. But there
mm-hmm.
are things in your home, including your home, that's going down that you can
Yeah, the wear
also reap the benefit.
and tear.
Yep.
Mm-hmm. Yeah. So that's what the
And
depreciation is with the taxes.
I love it. I'm gonna throw this in there because it just came in. I earn money in the United States and overseas because my business is virtual. I'm online. I'm a virtual business. How does the foreign earned income exclusion work?
That is so complicated in itself. There's so many moving parts to it. So say that again. You live outside the United States, but you
I
sell.
I I live in the United States. This person lives in the United States, but they
Okay, live.
also but so they're here with you and I, and their business is virtual. So they have customers that pay them um in US currency and foreign currency.
Mm-hmm.
And so they earn money technically overseas money. And
Uh-huh.
so how does that work? I guess for the foreign earned income exclusion, you have to live overseas, right?
So yes, you do live overseas, but you can also, if you make they're going to still tax you on it because it's converted to US currency once it actually hits your bank account, right? You're going to get taxed on it. You do have to report any income. Well, depending on what kind of system you use, like if it's PayPal or Square or something like that, they're going to report it anyway to the US, to the government, but you still have to report it on your taxes as well. And that should be like in your statements, like where it came from, what the currency was, and so forth and so on. But yes, that is a tax credit that you can use if you live outside of the United States, but you have to file taxes on the business that you have in the United States, if that makes sense.
That
Because
makes perfect sense.
yeah, so I don't want to confuse anybody because it's a lot with that one too. That's like one of those things we have to evaluate your whole situation as well. Are you making the bulk of your money from outside of the country, or are you making the bulk of your money here, but you're making a good percentage of it there? So it's gonna like depend on that as well.
Absolutely. And earlier, like you said, where did you open your business? If you open your business in one of those high cost states like California, New York, Florida. And so your taxes are affected differently, depending on where your business is incorporated, even though you may live overseas.
Yeah.
So, and so that's what she's saying, y'all. You need to come see her. Y'all aren't listening. Y'all need to come see her because it's such a delicate touch that needs to be applied that you need to sit down for that consultation and be with her so she can really dissect, like a surgeon, she can really dissect your business and take it apart into its fine pieces and then bring it all together and show you how it works.
There's one more thing I wanted to say because someone did ask me about this prior to getting on if I would touch on it, and I didn't want to forget. So when you have a business and you do have children, you can hire your children to work for you. So there's rules around it. And then you also have state rules too, because of child labor law and things like that. But yes, your children can work in your business and you can pay them. You do have to pay them. Okay. It has to be work. But listen, if the kid has money, so you do have to open a bank account for them. Okay. You have to do everything the same way as if you were, and this is another way to save on your taxes, right? Yeah. So this is you're getting that W-2, you're getting the employee tax deduction on your business taxes, right? So you're going to have them fill out paperwork that they're being hired by your business. You know, a W-4 has to be filled out, the I-9, so forth and so on. You keep those on file for as long as they are working for you. What else is there? Oh, so you have to open them up their own bank accounts at a bank or some kind of prepaid card or something like that method of paying them because it has to be like electronically with the IRS. And then from there, whatever you need to use to take care of your kid, you're gonna use their bank account to pay for it, right? You can pay them up to $12,000 before they have to pay any kind of tax on it. So you may have to pay those employee taxes back, but then they pretty much can get them back when they file their taxes at the end of the year, and it's nothing. You know, it ends up being nothing that they actually have to owe the IRS or pay the IRS. But then that's a tons of tax savings for you. So I think in most states, the child has to at least be like 5 years old. Some states allow like up to 3, from 3 on up. If your child can pick up trash, they can be a janitor within your business. Like,
in that office, that home office.
No, for real. Exactly, you need somebody to clean the home office, right? So if they can, fix your desk for you, if they can write note cards for you, like it has to be some kind of job that they can actually do that you're giving them and you're paying them for, and it's helping you by giving you extra tax deductions. And you heard me say I got 8 kids, right? So I know. But yeah, that is definitely something that you can do as well to help your tax situation, to get you more deductions, to lower your tax bill that you have to pay out to the IRS. So I hope that was helpful. If you need more information, definitely reach out to me.
That's incredible. So you actually have 10 employees because you just hired 2 and you have 8. So you actually have 10 employees.
That's right. Yep. But I hired my 2 main employees for like all my administrative stuff, really running the business stuff. Those are like the housekeepers and the janitors, and yeah.
Powerful. Is there anything else, Miss Israel, that you want to share with our audience?
The business account allocations. So when you earn your fee or your money that you get from your clients, everything goes into the bank account. Everything goes into the bank account. And then from there, you need to have multiple bank accounts set up as a business owner. You're going to have your business accounts. You're going to have your expense account, right? You put 15% goes into your expense account. You have the 40% that goes into your tax account. You have your payroll account, and then you have your personal account that you send money to. So you're gonna have that main business account that everything's gonna come into, and then you funnel it out into the other accounts. So that's how that works.
Absolutely.
Mm-hmm.
The main business funds everything else, and you're paying yourself as an
Mm-hmm.
employee of the business, not working in your business, but
Mm-hmm.
not working in your business, you're working on your business. So
Exactly. So if you're paying yourself, like I said, that goes more into like the S corp or whatever. If you're just taking money from your business for your personal, if you're LLC, you can do that. That's absolutely fine. But like if you're any kind of corporation or being taxed as a corporation, you need to do it according to the rules, which is take a salary that's reasonable. Don't get caught up with that reasonable either. And then also should be taking dividends and I'm sorry, I'm having brain freeze.
you fine.
You
You
should be taking
fine.
your dividends and your other little deposits that you take from your business as well. So yeah.
Absolutely. So when she says reasonable, y'all, you can't sit there and say that it has to be comparable to the work you do in the company. So that's
Absolutely.
what she means by reasonable. You can't sit there and say if you're doing executive level work,
Yeah.
you have to pay yourself according to the executive level work that you do for your business.
Exactly.
That's what she's
And
talking
then,
about.
exactly. So, and it's going to work the same. I know it seems kind of confusing how you have to do that, but I'm going to try to just make it a little simple. So, when you are paying yourself a salary, you're going to issue yourself a W-2 at the end of the year. You know, you can choose how to pay yourself a salary, whether it's weekly, bi-weekly, monthly, bi-monthly, whatever. That choice is totally up to yours, but it does have to be, I think, within 2 months or at least every quarter. Um, so you're going to take that salary, you're going to pay taxes out of that salary like you would for any other business, right? Any other employer. You can still claim your dependents. You can still claim, everything that you would normally claim, right? And then you're only going to have to pay self-employment taxes on whatever dividends that you take from the business because everything else is going towards the salary and is being taken out of there. But it still ends up being less than what you would pay as if you were just a LLC. So it still ends up being less. You definitely save money, but you just have to ask yourself, is that the right decision for you? Because if you elect to be an S corp and you don't make a lot, you don't earn a lot, it can end up being a problem. If you're an S corp or a corporation and you change your mind that you don't want to do it anymore, then you're not going to be allowed to you can go back, but you won't be allowed to be an S corp again for years. So
Ouch.
it's not anything to take lightly on whether you should do that. You should really evaluate your financial situation, evaluate your growth rate. Everybody should be doing this when they sit down and do their meetings and things like that on a monthly or weekly basis anyway. So you just evaluate your situation and see if that's something that could work with you. I definitely do recommend that you do your research. And I know even with doing your research, it's a lot of confusing and conflicting information out there about it. So the most simplest way to understand it is to actually go to the IRS's website and they have a publication on it. Read that publication. Like everyone says something different because I had other tax professionals that told me I was wrong when I know that I'm not because I'm very cautious. But it's not for everybody. It's not if you're making 100,000 or if you're making less than $100,000 a year, don't take a salary for it may not be worth it taking a salary for yourself and being an S corp. You know what I mean? If you're making more than that, then yeah, I would say if you're making 80,000 or more, it will be worth it. That's my opinion. We still have to look at your total situation because some people can be making that, but their expenses are way more than what they're actually getting to keep. So
Yeah.
that's why I said every situation is different. It just really depends. Taxes are also favorable to people that are stock investors. But yes, the same rules apply as if you were a business when you're a stock investor. You got to pay on those dividends, on those profits. You get the credit for your losses, so forth and so on.
Absolutely. Absolutely. Miss Israel, I want to thank you again so much.
You're
So
welcome.
thank you so much for taking the time to be with us and spend with us and share and give back. We could not do this without you. And so everyone, thank you for tuning in. Thank you for spending time with us as we chat and we discuss and Miss Israel answered your questions. I hope she did. And if she
Mhm.
didn't, please link with her on Instagram, Facebook, call her. She gave out her number earlier, and reach out to her if you want. If you can't find her, if you can't find this show, if you're listening to this in an audio version, please link back to me and I will get you in contact with her immediately because this year is almost over and you need her. I need her. We need her knowledge to so that we can have a better
Mhm.
2021.
I'm trying
So
to.
so ladies and gentlemen, thank you for tuning in. This is Marcus Norman and Miss Israel sharing these tax benefits on Gentleman Style Podcast. Like always, take care of your friends, take care of your families, and take care of business. This is Marcus Norman and Miss Israel signing off. Thank you.